Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, April 21st at about 2:45 p.m. Eastern. Well, the S&P 500 consumer staples sector has been a pocket of strength so far today, boosted by gains in Procter & Gamble. That's up 3.8%, following its positive earnings and guidance. Clorox is up as well. That's another top performer, reaching a fresh 52-week high today. On a broader scale, though, market breadth shows decliners lead advancers by greater than 2-to-1 margin at the New York Stock Exchange. I started to call it the NYSE like I usually do, at the New York Stock Exchange, and a slightly smaller margin at the NASDAQ. So on that note, as we're right in the middle of earnings season, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. We keep an eye on the SPY because it is kind of the flashlight or the guide. These are the top 500 stocks by market capitalization in the stock market. And watching this chart gives us a guide as to where many stocks will go in the general mood and manner of the market. Now, last Friday, a week ago, we looked at a weekly chart of the SPY, you may remember. Back then, price was trading, was a weekly chart, yes, but price was trading at $415 or $41.50 on the S&P 500 itself. And today, when I captured this chart, the SPY is trading at $411.94. So as you can see, this was last Friday. Now, we were looking at a weekly chart last Friday, but you can see how we've gone nowhere in a hurry here. As all the way starting in the very first part of April when earnings started coming out, the market, as you can see here, is trading above the 200-day moving average, the black line coming in at about 394 and change, trading above the 50-day moving average, which is coming in at 402 and change, and above the 20-day moving average, which is coming in at about almost 408. So this is all fine, but we've kind of gone nowhere in a hurry. The SPY is still trading 15% above these October, look back here, these October lows. We want it to be in a technical bull market. The SPY needs to be trading at least 20% above those lows, but we can't argue about that right now. Let's go back for our knowledge today to see what this chart is telling us. Let's go back to the December lows, right? December 2022. Let's go back to the December lows and look how they formed a consolidation here from the middle of December into the first week of January. Now, what are consolidations? It's when stocks trade basically sideways. What you can see here is the bulls are buying and keeping price up. The bears are selling and keeping price down. And they're doing it evenly enough so that the stocks or the asset, in this case the SPY, is basically up one day, down the next, up one day, down the next, just going sideways. But what it does here is it forms, when price is above it, it forms an area of support, we call it, or in this case, a key support area that can be very important. Now, we know that it formed a consolidation here at about 380. I mean, there were some lows here at 376, some highs here on the consolidation candles up around 382 or so. We're going to just call it 380 as our point here of support. And we know, of course, that the October lows here that everybody made on the SPY were down here at 348 when price gapped down, open, and then moved higher. Anyway, from this consolidation low, we're going to call it 380. The SPY rallied, as most everything did, rallied sharply up. We know it rallied up to the February highs to 418, moved right past these lower 410. These two highs right here, moved right through it, very bullish. When it started getting very steep, We looked at it, looked at the 14-day RSI, said it is overbought. And when the RSI is overbought, we usually see a little profit taking come in. And that's exactly what happened. So we established this high here at 418 in February. Then price started to move down, and it fell back down to, believe it or not, right back down just a little bit higher than 380. It's right in the price. If I could draw a straight line here, it would be right in the middle of this consolidation. So price did move back to retest that 380 number, but look what happened. The bulls came in fast here. They didn't wait for it to consolidate or move around. The bulls moved in fast here and started buying, and price once again came back up through the 200-day moving average. The 20-day by then had dipped. Price went above that and skipped, hopped, and jumped. Look how it gapped up through the end of March, pulled back a little, and then moved back up to where we were last week. So we made this high here, if you want to call it that, at right around 415. If you remember, the high up here is 418. This was the February high at 418. So again, me in a straight line, but we can draw it like that. That 418 high and the consolidation just below it is definitely presenting the SPY now with an area of resistance. And when we say resistance, just know the simple part is anybody who bought the SPY up at these levels, they may not know how to read a chart like you and I do, but they do remember price usually. So a lot of traders, investors who bought up here at 418 felt the pain when it moved back down here to 380, and if they held on when it got back up toward 418, then they start saying, my gosh, I'm going to sell it now and at least get out, because the last time I was at this price it fell. So I'm going to get out and keep whatever I have left. And that means there's more sellers than buyers. Every move in the market is more buyers than sellers or sellers than buyers. So at any rate, now we're back to these highs again in the thick of earnings season, and the SPY is saying, all right, I'm going to stand here and watch to see what happens, because we are very deep into it. Some of the large caps are going to announce next week that really move markets. That's going to be Alphabet, Microsoft, Amazon. Some of those big guys definitely can move the market. So the SPY is pretty much trading sideways here, kind of waiting to see next. If it breaks above 420 and stays above it, that would be very bullish. And again, we do know we have support down here. We have the 20-day moving average at, call it 408. We have more potential support at the 50-day moving average at 402. And of course, down here at 394 and 395, where the 200-day is. But with the number we really have to watch here is 380. That is that's our line in the sand that we'll, fingers crossed, we won't have to worry about. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. Now, the Qs represents the NASDAQ 100, which is the top non-financial companies by market capitalization in the NASDAQ, like Apple, Amazon, Microsoft, Alphabet, Netflix, that whole group. So this ought to get to be pretty wild and hairy next week. Now, when I captured this chart today, the QQQ was sitting right on its 20-day moving average at $316.49. It is trading. Here's the October lows back here. The QQQ is trading right at 20% above its October 13th lows at 254 back here, 254.26. So that's a good thing. At least it's kind of bullish here. Now let us go back here while we're at it and look at these December lows back here, just as we did with the SPY. This is important. So the December lows here are right at 260, and again, October lows were 254. So we're making higher lows here from those October lows. In fact, these two connect pretty nicely. So you can see that after that October low, it moved up very quickly. It got really volatile, then it fell back down. The Qs then rose straight up. We always know straight up isn't going to keep going forever. So then it, of course, consolidated, jumped up, came back down, and this 260 has become a very important support line for the QQQ. Then it started rallying in the first week in January, and as we talked about the SPY, but even more so, the Qs, the tech stocks, made very dramatic, very strong uptrend here, parabolic move. And yes, it became overbought, and the RSI, as you can see, I think, did move above the 70 line, which means it's really overbought, which means we're probably going to see some profit taking, which is exactly what came into place. Now it flew up, the Qs flew up to $313.68, $313.68 on February 2nd, then gradually slid down here to 290, below the 200-day moving average. On the second day of March, actually right here on the second day of March, then rallied up and moved down a little more to 285, and then started rallying back up. And at the end of March, let's see, yeah, rallied to 321 up here at the end of March, and has then started consolidating because we all know that April is earnings month for the first quarter. So you can see here it rallied up to 321. That's our new price resistance level. And then it dipped down a little bit, 316 area, and just started consolidating sideways, saying, all right, we're in earnings season. We've got a lot going on politically. And globally, so let's just see what happens here. So while some stocks have definitely moved higher, a lot of stocks have moved lower, so that means the bulls and bears are duking it out. The bears are pushing down, the bulls are pushing up, and we've got a sideways consolidation while the Qs kind of wait it out and see what's going to happen next. I would suspect that next week, because so many of the large caps are announcing in this ETF, that we could get more volatility. Now, volatility doesn't mean the market has to be going down. It just means that we get bigger price swings. Like, look at these candles in this area here. Some of them open at the lows, close on the highs. Some of them open on the highs, close on the lows. That this is a very volatile area here. There's a lot more volatility here. It's like you can't, not that you ever could, but you can't depend on what's going to happen, and back again to trade what you see, not what you think is going to happen. Right now, it's been fairly calm for the month of April, just kind of moving sideways here. So again, let's give it into, I'm giving it in. I'm trying to be patient here, not my strong point, but give it into next week and see what goes on before I open up any large trades. Our final chart today is a little more conservative, but it may have promise here. This is a daily chart of the ProShares Trust Pet Care ETF. The PAWZ is the symbol, the pause. I think that's very apropos. The pause, as we'll call it today, has 32 top holdings, including IDEX Labs, Zoetis, Elanco, Chewy, Nestle, and Colgate-Palmolive. Yes, it has quite a few consumer staple stocks in it, and that's one reason I like it. 32 top holdings. I just told you the top ones. When I captured this chart today, the pause was trading over here, if you can see it, at $51.93. You can't see it on this chart, but the pause, you're looking at this and saying, Toni, where can it possibly go? The pause made an all-time high in December of 2021 at $82.84. Then it gradually fell to the October low, you can see on this chart, so it pretty much gave up quite a bit It fell to the October low here of $43.47. But now, and you'll see it if you look on a long-term chart too, it's gradually starting to move higher here. And yes, I tried to pick a stock where I could just kind of sit and watch and be patient going into next week if the market behaves. So it fell to this low of 43.47, then gradually started moving up to 51, up here to 51 in November and December, then dropped back down to December lows. Almost all stocks or ETFs have this pattern, and held these December lows right here. So since then, it gradually started working. Did I say March lows? I didn't mean that. Fell to December lows at $46.79. Since then, it started working its way higher. It jumped up pretty dramatically in the first week of January, fell back down here. We can see a candle here that means this could be the lows. It fell down to the 50-day, then started back up, ramped up much higher, got overbought on the 14-day RSI, which tells you, okay, we're probably going to have a pullback and profit taking here. That's exactly what happened. And then the pause started falling down here with the rest of the market, fell down through the 50-day, the 200-day, the 20-day up here, fell down to right here. That's the $46.79. So it's holding these lows from back here, okay? And that's a good thing. Now it started up just a little bit again, back up over the 20, and everybody else is kind of helter-skelter in some ways. This has been kind of a quiet rise. Now, again, in this week coming up in earnings season, I'm going to be very careful for whatever I get into and very conservative. But if in the coming week, if the pause can stay above the 200-day moving average, which is coming in at $50.10, that's for the 200 days moving in. If it can stay above the 200-day moving average at 50, call it $50 if you want. And if the market behaves reasonably well, I may add a small position to my trading portfolio with my relatively tight stop down here at $49.80. Now, if and when the pause rises above 54.50, see when and if it rises above 54.50, I will add to my position, and of course by then I will have a trailing stop. You may want to keep an eye on the pause in the coming week. And now, as we wade through our earnings season, first quarter earnings season, if you'd like to become a more successful trader, this is the perfect time to check out my trader training programs. You can choose from 10 different online training programs, like our popular flagship product that everybody likes, 7 Steps to Successful Trading. We also have strategies, you're going to like them, that show you how to swing trade, which is a really cool thing to know as a trader. How to trend trade, which is one of my favorites because it's a lot less work. How to bottom fish, which of course I love in this particular market because we're going to get set up for this, get some great opportunities soon. Of course, for novices, we have how to read charts. And for everybody, short-term traders, we have 3 winning setups. So find out how to elevate your trading skill set and increase your gains quickly and easily. To see all of my online training programs, simply go to the link on the screen up here or click on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.